Joining us now in an exclusive interview, Marvell CEO Matt Murphy. Matt, you had beats here, but data center and automotive look strong. The rest of everything else still got some inventory to burn out. How quickly does that happen, and do things get going?
Hey, John, great to see you. Thanks for having me on. Yeah, you're right. The two very strong markets for us were in data center as well as automotive. In the data center, that was driven actually by strong growth in AI, and we could talk about that later, but we also raised our outlook for our revenues from that segment, as well as actually traditional standard cloud infrastructure was strong. And then automotive was up 32% year over year in our second quarter, and for our third quarter, we guided it to be up 30% year over year for the third quarter. So those two were standouts. The way to think about it, John, is we have a diversified set of technologies at Marvell and market orientation. And so the areas where you noted we had some inventory and some slowdown were both in the traditional enterprise area as well as in the carrier market, which includes our 5G products. And if I just take a quick step back and you look at the last few years, basically our enterprise business has roughly doubled over the last few years, and then 5G, and you and I have talked about that over the years, was a real standout success story for Marvell. So those have had incredible runs. They're going through some short-term inventory corrections, as is kind of across the industry.
Yeah.
But the good news is we have a diverse portfolio, so you have things like AI and cloud and automotive kicking in, and that's why we're able to show sequential revenue growth from Q1 to Q2, guiding Q2 to Q3 up again, and also we signaled to investors that we would see the fourth quarter up as well. And this is in the backdrop of one of the largest cyclical downturns we've seen in the semiconductor industry over the last 25 years.
Yeah, it's been something else. And you've been doing some acquisitions as well, building sort of your share of wallet in the cloud and among hyperscalers. And sometimes I think with this big shifting macro backdrop, investors can lose sight of what individual companies are doing to try to build advantage. So talk about that for a bit. Some of the areas where you've been building IP that affect both automotive and cloud, where you got various technologies working together in a way that you think customers are going to continue to need.
Yeah, it's a great point, John. And I think in those two markets, it's actually two very different approaches we took. So in the case of automotive, I'll start there. That is effectively 100% organic, ground-up effort inside the company. When I became CEO 7 years ago, I think the revenues from automotive were approximately zero. And so we had an incredible engineering team that leveraged some very core technology we have in networking and Ethernet technology, and we've now really proliferated that inside all of the major car companies. And fast forward a few years later, we said last year that was a $200 million a year business from Marvell, going to $500 million, and with very strong adoption now across the board. So we built that business up inside the company. In the case of cloud, we've taken very aggressive moves to do organic and inorganic strategies there. So we talked a few years ago, we acquired a company in 2020. We announced we were acquiring, and we closed in 2021 of a company called Inphi, which has just been a home run for Marvell and the combined Inphi Marvell effort. That business is driving outsized growth, and in particular this year, we actually said of the $200 million a quarter run rate we were going to see in AI exiting the year, almost all of that contribution actually was from Inphi. And if you look back when we acquired the company, the prior 12 months revenue was, for the whole company, was less than $700 million. And now we're talking about $200 million a quarter just for the AI portion of that type of product line. So Matt, we've done those types of things, John, to get ourselves in a good position.